In its effort to protect the U.S. economy against uncertainty over trade and slowing global economic growth, today the U.S. Federal Reserve lowered interest rates by a quarter percentage point for the second time since August. The interest rate will now hover between 1.75% and 2%. What does this second rate cut mean? Should the Fed be lowering the interest rate now? What's going to be its likely impact? And how much influence does the ongoing China-U.S. trade tension have in the rate cut? To discuss these issues and more, I'm very happy to be joined in the studio by Qi Jiang, Assistant Director of the International Monetary Institute at Renmin University of China, and Jim Rogers, international investor and author of A Warning to Japan. We'll also speak to Stephen Roch, Senior Fellow of the Jackson Institute of Global Affairs in Yale University via Skype from the U.S. That's our topic. This is Dialogue. I'm Yang Ray. Welcome to Dialogue. First of all, Mr. Rogers, what signals does the second rate cut of the Federal Reserve deliver to the rest of the world?
Mr. Yang, all it means is that there are bureaucrats and academics who don't know what they're doing. They're terrified of Donald Trump, and they do whatever he says. They deny that, but that's what's happening.
President Trump complains bitterly that Chairman of Federal Reserve Powell fails to do enough, fails to cut more interest rates, and he accused Powell of lacking guts and vision. What did he mean? President Trump. Yes, your answer.
Oh, it's my answer. Sorry.
Yes, your answer. I'm looking at you.
Sorry, I need just a cue.
Okay.
Well,
you're still recovering from the jet lag?
Yes, I guess so. Well, I think this is a certain situation in here. As a president in history, like always, the President of the United States of America, they always want the rate cut. We have a saying that the smile of the goddess of the economy is always shining the way for a better president, like Bill Clinton. You know, in his prime, in his administration, we see American economy goes up quickly and so good, and he get two terms of the presidency, and now it's Trump's term. But in Trump's term, he understood very well about the current economic situation in America, which the economy is growing sluggishly. So he needs more than ever a better interest rate, loose money, easing money, so we have better water in the pond, so we can see more fishes, we can see more things growing.
Here is something very controversial. Let me go to Stephen Roch. Professor Roch, our guest speaker from Renmin University of China, Zhang, says loud and clear, President Trump understands the American economy very well, but that has caused a lot of controversies. I'd like to have your take.
Well, thank you, Yang Ray. The president understands how to appeal to his very narrow political base. I would hesitate to conclude that he has a great understanding of the American economy, the Chinese economy, the role of tariffs, and certainly not the role of monetary policy and the Federal Reserve. Quite frankly, while I appreciate the thrust of your questioning, I think we spend too much time in talking about President Trump and his influence on domestic and international economic issues. These are issues that are well above his pay grade, and his failure to understand them, I think, renders him pretty much a minor actor, much to his own dismay.
Well, Jim, do you agree that Mr. President seemed to have a better understanding about the politics, particularly partisan politics, and how to win more support for Republicans in the next election than the economy itself?
Ray, if you take your advice from the American government, especially from Donald Trump, you're going to go bankrupt. So you should be very, very careful. He has been bankrupt a few times himself. He doesn't understand economics. You know, he thinks he's smarter than history. He thinks he can win trade wars. Please do not get your economic advice from Donald Trump, or we're all going to go down the tubes. He may take us all down the tubes anyway, but he has no clue what he's doing.
Americans may feel humiliated by remarks from the UK, like Mr. Roger, but it doesn't come as a surprise that at least 10 years ago, Professor Malik from St. Gallen, a German-speaking area of Switzerland, precisely forecast the financial meltdown because of the speculative behavior of investors in Wall Street. And that seems to suggest that Americans could be very stupid. John, do you agree?
No, I don't think this anything called to be stupidity. I think it's just the market behavior. We call it the animal spirit. In the market, when you join the crowd of investors, sometimes we've just been blinded by the only goal in front of your eyes, which is the profit. And then sometimes you are going to purchase the profit in a very blind way. So that kind of a thing, sometimes we are called exuberance, blind exuberance. But sometimes when it goes to the tipping point, and then the whole market is going to fail. This is the failure of the current market structure. The whole world are now having the similar problems, I guess.
We are spending too much time on the U.S. economy. Let's look at emerging markets. China is one of them. And Jim, very quickly, Brazil acted accordingly to cut their interest rate. So did some of the oil-rich states in the Gulf the same way. What does the impact of interest cut by the Federal Reserve mean for the emerging markets?
Right. The United States economy is the largest in the world. The Federal Reserve is the most influential central bank in the world, and many people follow what they do. Now, they don't know what they're doing either.
Not because of the currencies are pegged to the U.S. dollar.
Well, pegged or even semi-pegged, yes. The U.S. dollar is the most important currency, whether we like it or not. And so, yes, many people follow the lead of the American Central Bank. Unfortunately, they're all going to go down the tubes because the American Central Bank, interest rates are the lowest in recorded history, right? They have never been this low in recorded history, and we're all going to pay a horrible price for this.
Okay, Steve, do you still believe Federal Reserve remains the most influential and delivers global impact easily? And what do you think of the response, if any, from Prime Minister Modi of India? It's one of the largest emerging markets and is very sensitive to liquidity in the monetary market. What do you think of, say, the immediate response from oil-rich states as well as emerging markets as a result of the latest interest rate cut by Federal Reserve?
Look, I think right now the Fed certainly is the most important central bank in the world, but you pointed out, Young Ray, that the precedent of 10 years ago is an interesting case for us all, to study. And the Fed played a key role, in my view, in promoting the financial crisis because it provided a lot of excess liquidity in the 3 to 4 years before the meltdown in the fall of 1998. So this was 2008. This was an asset bubble fostered by incredibly easy monetary policy. The Fed is doing the same thing again. That's the important point. The Fed has no deep institutional memory of the mistake it made prior to the global financial crisis and was on a path to normalize interest rates late last year, but then when the market sold off, the Fed panicked, reversed course, and has now cut rates a couple of times since then. The Fed is being led by their desire to continue to prop up asset markets, and that's repeating the same mistake that they made prior to the global financial crisis of a decade ago.
Jim?
Right. It's a very good point. The American stock market's at an all-time high. Rarely do you need to cut interest rates when markets are doing so well. So this is going to lead to a terrible, terrible bear market for all of us. It's going to be the worst in my lifetime. So you should be very worried. You should watch CGTN and know what's going on, because this is going to end very, very badly when interest rates start going up again, and then we're all powerless, because interest rates now are the lowest in recorded history.
John, do you view the second rate cut as a result of making concessions to the political pressure from the White House? Because President Trump always accused Powell of lacking guts and vision, accusing him of not doing enough. So after the drone attacks against oil facilities in Saudi Arabia and the corresponding chaos as a result, do you think Powell made a right decision or made a right concession?
Well, according to my observation, still, the Federal Reserve are still acting independently. I think Federal Reserve still been observing some potential signs of potential falling of the economy. Just to watch, like just Mr. Rogers has mentioned, the stock index is really hovering on a really, really high peak. So there's no one can afford just a meltdown of the stock market at this kind of a height. And also, we're viewing certain tips that American economy still are growing sluggishly. So without a easing monetary environment, I don't think American economy is going to be still that healthy in the next 2 or 3 years. So Federal Reserve, they always have one kind of a way to manage the monetary policy, which is to manage your expectation. They're showing you they're going to lower the interest rate, so the market will make the reactions so in advance. So instead of just giving everybody a sudden notice that we're going to suddenly cut the interest rate and just make surprise the whole market, so they were going to give you the notice that we're going to do the things step by step, so the market will know there's going to be easing money going to the market, and then they were acting accordingly, so the whole fluctuations will be ironed out.
Do you agree, Jim?
No. Well, let me make my point. The American economy has had its longest expansion in recorded history. America has never expanded this long. That doesn't mean it cannot go on for another 20 years, 50 years, but it never has. And there are many signs that the economy will have to slow down eventually. So what does the Fed do then? What does it do when the market's down 15%, 20%, when unemployment's going higher? They've already cut interest rates to nothing. This is going to be the worst bear market in your lifetime. It's going to be the worst in my lifetime, and I'm older than you. So it's going to be the worst in a lot of people's lifetime, because they have made so many mistakes. They've driven interest rates to nothing all over the world. The rest of the world followed, Japan, Europe, etc. This is going to be so. But don't worry, Ray. This means you have job security, because somebody has to report this. Somebody has to keep us informed of what's going on, and it's going to be a mess.
Steve, ironically, gold prices fell, stock markets fell, we saw a rise of the U.S. dollar, quite against expectations of the general public. Now, what did these responses actually mean? What do you think of the note of irony?
Well, again, I think the rise of the dollar just reflects the fact that the U.S. is the best house in a bad neighborhood, and the rest of the world is in a weaker state than the United States. But I just want to go back to the point that you raised earlier and that Jim just elaborated on. The danger here is that we have a central bank, the Federal Reserve, that is now being driven by the stock market, by asset markets. And so we have created an asset-dependent U.S. economy that needs the drug of the Fed's support to our stock markets. And the Fed has compounded the problem today as it has compounded the problem prior to the global financial crisis a decade ago, and seemed to be on a path to break the connection between the stock market and the economy late last year. But then, because of a confluence of events, many of which we have discussed on your show today, has gone back to a broken recipe. Nowhere in the mandate of the Federal Reserve as given by the U.S. Congress is it written that the Federal Reserve should be targeting asset markets. This is a dangerous shift in the tactics and strategy of the central bank that began under Alan Greenspan, was continued under Ben Bernanke and Janet Yellen, and which is now being perpetuated again. And this is the essence of the problem. And we are creating an excess that could end badly. I'm not so sure that it's going to end the way that Jim describes, but I respect his great track record as an investor.
Despite the alleged structural policy mistakes that have been made by the American administrations over the years, let's look at other factors of uncertainty that may have attributed to the fluctuations in the stock market. Let's look at latest development in U.S.-China trade negotiations. Mr. Wang Shouwen, Vice Minister of Commerce of the Chinese government, was replaced recently by his counterpart from the Ministry of the Treasury to look at perhaps financial issues. This junior delegation from the Chinese government was sent to lay groundwork for yet another round of a serious trade talk between the United States and China in Washington early next month. Many people try to read into the personnel change on the Chinese delegation. Well, I know it's difficult for you to tell precisely what's really going on, the inside story of the Chinese government. But tell me, do you think this recent decision by Federal Reserve to cut interest rate will deliver any impact on the results of any trade negotiations between the United States and China early next month?
I think so. I do agree with you. Well, a lot of people are paying attention to the interest rate cut, but we have to know that interest rate cut or high interest rate or negative interest rate, they're just the result of economy. So interest rate cuts showing that the economy in America is weak. So it's more than ever, America and China need each other. I just want to pick up just the topic you raised.
Are you suggesting that it is difficult to decouple Chinese market at this defining moment of the U.S. lackluster performance of the U.S. economy?
Yeah, because recently, China and America are going on these frictions because we have a lot of so-called conflict on the interest. But here's the bigger thing, bigger issues everybody probably ignored. Besides just putting aside both of governments, just frictions on each other. And I think the bigger problem is that the whole structure problem of the economy in the whole world. You know, the gold is going down. The oil price is also going down, even though we just heard some tragedy happening in Saudi Arabia's oil field. Why the oil price is still going down? American dollars goes up. Why is that? The result is actually very simple, because we don't have enough effective demand. That's the whole reason. No matter how much money you put into the market, it's like you water the whole field, but there's no seeds, so no flowers are going to grow. That's the whole point. Because there are so many waters and no flowers inside, so no matter how much water you put into that, nobody wants the water. Therefore, the interest rate drops to so low, because money is also like a product. When people want it, its price goes up, which is the interest rate. When people don't want it, the price goes down. That's the interest rate too. So here comes the result. In America, we're seeing that their economy is weak by far. And how can we put more effective demand into American people's hand? Cheaper goods, better benefit. We need to benefit. How can we do that? Chinese products. So we more than ever need each other to work together to tackle down this bigger issue.
Well, Americans, particularly Navarro, Steve Bannon, they don't want to acknowledge that Chinese products are badly needed, cheap products are badly needed.
I have said to you before that unfortunately in Washington, D.C. right now we have people who don't understand history and think that if they did, they think they're smarter than history. They think that they can do what they want and that the world will do what they want. We're all going to
So it's not trade war, it's geopolitical rivalry.
Yeah, yes, it's arrogance, if you really want to know what it is. Arrogance and bad education. They should listen to Steve Roach about how the world works and how the economies work. But I suspect what's going to happen soon is we're going to have some good news, because Trump cannot keep having bad news because he's got an election coming up in November of next year. So I suspect we'll have some good news, which will make us all think everything is okay, and the markets will rally some more. It's not going to be okay, because when the problems arise again next year, Mr. Trump's going to come back with a serious trade war. He's going to blame it on the Japanese and the Germans and the Chinese. He's going to blame everybody in sight except himself. And then the real trade war will come back, and then we're all going to have a very serious problem.
Sadly, Democrats in the House and in the Congress cannot take the issue of a poor economy as a major reason to impeach this president. Let me go back to Steve. Steve, what do you make of the results of a next round of trade negotiations? Do you think the latest goodwill gestures on both sides, the Chinese and American side, indicate clearly that we need to be serious about making concessions instead of talking tough past each other?
Well, I think there are concessions and there are concessions. I'm not optimistic that we're going to have a big deal, a comprehensive agreement as the U.S. side has postured itself for the last couple of years. There could be, as Jim alluded to, some incremental progress that is aimed to sort of calm the waters during this political season for the United States. But for China to change its system, for China to agree to a U.S. formula that insists that the negotiations be ratified by legislation in the National People's Congress, for China to agree to the continuation of U.S. tariffs during this process of monitoring compliance, and for China to agree that the U.S. alone has the unilateral right to impose further tariffs if it is dissatisfied with compliance. I think all of those are simply unthinkable from the standpoint of the Chinese political calculus. We talk a lot about the American political calculus, but China has its own. So the fundamental structure of this deal is not a good one, but I think both parties want to calm the waters and create at least a temporary impression that things may get better for a while.
Well, Jim, let me go back to the earlier analysis that John came up with a few minutes early, talking about the weak demand. Now, the Chinese government was accused of manipulating currency because of the increase in RMB value. In that case, do you think it will be counterproductive for stimulating the demand of American consumers because our products will be more expensive?
Well, more expensive. The renminbi has been going down against the dollar. The dollar's been going up. I suspect that the reason they changed the delegation is because, to me, that means they're probably going to open the financial markets more, that they need to open the financial markets more. That's one of the things America wants them to do. So the way I read those tea leaves, and you should not rely on me, but it seems to me they're going to open the financial markets more in the next month or two, which will be good for China. Be very, very good for China if you should open your financial markets completely. This is not 1919, this is 2019. China's the second largest economy in the world. You don't have to worry about a blocked currency anymore.
John, would you elaborate a little bit more about the weak demand and what can China do to help our American consumers? Because American consumers, including those white deplorables in the Rust Belt, may help President Trump win the second term. Now, what can we do to convince the white deplorables and the sinking middle class in the United States that we can do more to create a win-win situation for both sides?
Well, the current situation is that the reason why China has become the second largest economy in the past 40 years, and that's the reason why Chinese renminbi has been probably one of the most stabilized currency in the whole world. There's only reason behind, because what we're seeing, the numbers jumping down and up, is just a phenomenon. The real reason behind that is the production efficiency of Chinese products. The Chinese people can build the products in probably the best quality to the price ratio way. For example, let me give you just one example. The lighter, I don't know, do you smoke or not? Well, judging from your teeth, probably you don't.
That's harmful, and
yeah.
Many governments have vowed to impose bans on the e-lighter, right?
Yeah, well, let's just say just the lighter. The lighter is very cheap ones. Chinese people can build the lighter, just a simple lighter, probably with the cost of 50 cents. But you have to understand that's a very long production chain. For example, you have to put the LNG inside the plastic shell. The shell should be thick enough so the gas wouldn't come out, or it cannot be too thin. It's going to be dangerous. And also you see there's rollers on side of it. It happens to be hard enough so you can roll like 1,000 or 2,000 times. But you have to make all the things, combine them into one small lighter with only 50 cents. And you sell this product into America, it's worth probably $1.5. And if you put this product in any other countries to produce it, you cannot have this low price with the same quality. And probably American consumers are going to pay double the price or triple times the price. Similar theory can apply to many other products in America. Probably 80% of American dairy product we're seeing a huge rise in the price. That's going to harm the American consumers. Well, Trump government tried to return more tax into consumers' hands, which is a good gesture. But how about if the price goes up even more, and then they offset the whole benefit they can get? And when you raise up the tariffs to like 25% or 30%, and all those costs, eventually goes back to the consumers. That's like the ABC of economics. And the Chinese yuan depreciated a little bit, so can offset this rise of the price. So still allow American consumers to pay a little bit less. I think this is all good for the American consumers. We have to, just like Mr. Rogers has mentioned, bad education. We have to educate the consumers to know who's doing good to them and who is harming them.
Well, Americans may not receive Chinese education in this case. Jim, what do you make of the therapy? What do you think should be the therapy?
The therapy?
Mm-hmm.
Well, what America should be doing is cutting tariffs, getting out of a trade war, opening its borders more. We should balance our budget. We have many reasons that we have a big trade deficit. It's the lack of education. It's spending on the government instead of investment. No, this is not because of the evil Chinese. This is because we in America made many mistakes, and now we're trying to blame it on somebody else. It's not your fault. It's not Germany's fault. We have made many mistakes, and we're refusing to face facts.
Steve, what do you think of the issue of education? Do you think American consumers and politicians need to be educated?
Well, of course, I'm a big believer in that. I'm a professor at Yale now, and I teach a large class. And by the way, there's a record interest in my China class this semester at Yale. But I just want to pick up on the very important point that Jim just made. Last year, 2018, the United States ran trade deficits with 102 countries. That's 102. China was the biggest, but by higher math, that leaves 101. That reflects, as we teach in economics at any university, our lack of saving driven by our big budget deficits. If we want to address our trade deficits, we can't do them one by one on a bilateral basis. We need to go after the savings problem, which is largely attributable to our ridiculously large and growing budget deficit. China has become the victim of our own obsession with budget deficits and the lack of a responsible fiscal policy in America.
Thank you so much, Steve, Jim, and John, for participating in this brainstorming about the latest interest rate cut by the Federal Reserve and what it means for the rest of the world. I'll see you next time. Goodbye.